Very nice to see all of you here back at 5 Degrees. It was actually quite a while since we've had our Holland Fintech meetup here, but I'm really happy we're back here actually after a couple of years. And of course, we actually have an entertaining and learning-full experience again with all of you here. My name is Don Tinsel. For some of you who might not know me, and I'm CEO at Holland Fintech, and I'm happy to actually take you through all the developments in fintech today. As well as, of course, present some very nice companies to you. So we're going to tell you about what they're working on and hopefully actually spark you with some good ideas, potential business opportunities, or other insights that you might like to collaborate with. So, of course, we're very happy to be here at 5 Degrees. Where is actually someone 5 Degrees who could do the welcome word on top? Yeah, cool. Thanks, Maurits. Come on over. I'd like to hear a bit of you, of course, about why we're here at 5 Degrees. What's happening at 5 Degrees? Well, why do you like that meetup here? Yeah. And of course, we're a little bit about what's going on at 5 Degrees at the moment. Yeah, sure. That's fine. Thanks for having us. First of all, yeah,
I can also speak up, also no problem. Well, let's just start. Welcome here at 5 Degrees. It's a pleasure to host you all of you here. I think a couple of months ago we had a event here as well for the Amsterdam Fintech Week. So some of you might have been here before, but I have the honor to welcome you and tell you a little bit about 5 Degrees. I also prepared some slides for that, because I only speak through slides. Or do the slides speak for themselves? Yeah, I can also be silent. That's also good. We can also just go for it.
Can we get a slide up?
Right.
Can get the presentation started?
Yeah, so 5 Degrees, we've been in this business for over 10 years. We've been building core banking platforms quite successfully, I can say. We are now with over 150 colleagues spread over 4 countries. Our headquarters is here in the Netherlands, Amsterdam, and we have colleagues working in Iceland, in Lisbon, in Portugal, an existing relationship with, but it can also be any other solution from a bank. Because, yeah, the way we set up the platform allows clients to integrate fairly easy with our platform. Yeah, a couple of the clients that we are currently working with today. Yeah, some names we are really proud of and hope to keep working with for a long time. Then I think that's it for 5 Degrees. If you have any questions or any information you would like to get from us, please find me or any of the 30 colleagues that are here today. And then back to you.
Yeah, for 5 Degrees for being such a kind host. Of course, it's great to be here again. And of course, I should have said, it wasn't a long time since we were here with the community, because indeed during Amsterdam Fintech Week, it was a marvelous event here. But actually, the ones we do every second Friday of the month, actually, it was quite a while ago since we spent that here at the premises. That said, I just want to check in whether the mic is needed or not. Checking in with my colleague. I think for you here not, but at the back, is it all okay sound wise? Without mic?
I'm good.
Yes. What's at the back? Is it understandable? Yeah. Okay. Then is it okay, Mike?
We're gonna turn on the microphones now so that people in the back can hear. For the handheld mic.
So
let's
can I
make
do
sure
it without a
that
mic, or do you then don't have sound for broadcast?
I think it's fine without.
yeah, we have the sound for the broadcast.
Okay.
People on the call can hear it, so it's fine.
Okay, now we turn it on.
All right, cool.
All right. Yeah, so thank you for joining here. And please, at the back, there is a bit of room here at the front if you want to get a bit more cozy. And if you don't hear, please just raise your hand or flag that we can adapt for it. Just want to a few words about Holland Fintech for some of you for who might be new. Right, so we're an association of around 300 organizations that are active in financial innovation and are collaborating to share knowledge, figure out how to collaborate, understand where the market is moving, and together also work together on favorable market conditions, as in, is there enough investment capital available? How do we find the right talent? Is there enough research being done on this subject? Are the regulators in any way collaborative? In these kind of ways, I think that we can collaborate with, we think it's really useful to, especially since the field is evolving so fast and everyone's learning together from that perspective. We do that for a whole range of organizations, ranging from young startups, as you also see here on stage, up until large financial institutions and everything in between. You could think about big tech platforms, reg tech platforms, payments, lending, insurance, asset management. We basically can find all of them in our member base. That's also exactly the intention. We think that the future of financial services is built with a great variety of organizations, big, small, young, and old, that are somehow taking up a place somewhere in the value chain and collaborating there. Well, actually, there's still a big challenge, I think, right, on the way we collaborate. And we see also, for example, more new regulations coming to the market about how to do that. Think about the DORA regulation, for example, from the EU. And we're trying to sort of help everyone figure out, okay, how do I find my spot in that network? So basically, if I start up, how do I find my role in the ecosystem? How do I scale up, grow internationally? Where do I find the capital, the talent? But also, how do I collaborate with larger firms, as well as for larger, more incumbent firms? How do I transform into new ways of working, using new technologies, and working with other firms? So that's how we try to basically facilitate this by thinking at it from an ecosystem perspective. Can we actually help everyone get access to all the understanding, the investment, the talent, and the right circumstances? And that's why we want to help everyone to connect, learn, and innovate through the work that we do. And one of the ways we do that is by bringing people together at events like this, where we really think about it's about knowledge sharing, sharing ideas, figuring out where there's collaboration potential. So that I hope you also keep in mind during the afternoon, right? So if there's something that you don't fully understand, a term that's unclear, or anything else, please raise the issue, because we're not here to scrutinize each other for having knowledge or not, but actually rather to learn and bring everyone up to a higher level of understanding. I think that's the whole idea. What we always do on a monthly meetup is actually start with a bit of a fallback towards what happened in the last month, because we do a news recap every week in the newsletter, but we'd like to also do a bit of an overview here at this event, so we have a bit of stuff to talk about. And later on in the event, we'll have a Kahoot quiz, where you're actually be able to demonstrate your fintech knowledge in a bit of competitive way, which we always like to make it fun. Because in the end, it should be enjoyable to learn and exchange some views here. Thanks again to my colleague Andre for helping putting this together. So we're looking back at October now, right? So this is all news about basically about 2 weeks old. MasterCard has offered a service that actually is able to kick out cryptos where they're dealing with accounts that might be fraudulent. Quite interesting one. So you see that we've seen over the past months that increasingly incumbent firms, like the bigger banks, are actually moving into crypto services. A bit contradictory to the market where crypto was going down and investments were going down. You still saw that a lot of the projects that were started with the likes of Citibank, JP Morgan, and others were actually still on the way of maturity. And also here, this one, the crypto secure, is also one where I think it's been worked on for quite a while. But it's really nice to see actually that you see that much of the crypto services are being brought into the more mainstream way of working. Looking at the regulatory perspective as well, right? So looking at potential fraud, money laundering perspective. And of course, if you look now at what happened this week, especially with STX basically going down the drain, it's quite FTX going down the drain. It's quite interesting to see that there's much more need for, let's say, more stable regulated parties to take a role in that ecosystem, and we'll probably see much more of that going forward. So at the same time, we see in the same range, I think, of sort of a lagging momentum. Japan is making a plan to invest in NFTs and the metaverse. I think it's also pretty much old news, and I think most of the market participants are already slowing down their investments in these spaces. but governments are not that fast, so they're basically now picking up on the trend from last year and moving into this space. But it is quite interesting, and I think at the same time you see that there's a lot of exchange going on where people are getting smarter to understand what NFTs and metaverse are actually what they could be useful for, right? So I think we're going past the hype now, and you might actually see, for example, most people fully agree that there's not going to be one metaverse, right? But there are a lot of online communities basically that you could call the universe, like for example Roblox, right? It's an environment. If you have kids, you probably know about it. But this is a place where a lot of kids actually come together. That's where they play games, but it's also where a lot of their social activities are increasingly taking place. And so those kind of environments do offer a very strong economic potential. And if we talk about the metaverse, we probably better talk about these kind of environments rather than this big thing that Zuckerberg has in his mind. Finex is interesting. So there's new regulation about pan-European pension offerings. This is quite new, and Finex from Slovakia was actually the first to get a license to be able to do it. Quite interesting, I think, to do that you actually are looking at let's say cross-country personal pensions. In the Dutch market, it's not very likely to kick on directly because there's already a lot of options for personal pensions, and the ones that basically are single offering are not as easy to go around with the current legislation, especially with the transformation of the pension system coming up. But it's good to see in any case that this is a place where the European harmonization is actually making some impact. Really curious that we're going to follow how they're actually going to be able to expand across Europe from their home ground. MiCA or MiCA is actually really important legislation for the crypto market that has come out last month and became final. This is something that's been worked on for quite a while. We've also been working with some groups to actually give input on the legislation there at the European level. But now it looks like there's the regulation has been set, and now a lot of parties are looking into translating it into day-to-day activities and how they should be regulated. We've got it shared on our website, but we're probably going to do also some events and some sessions to actually dive into what this regulation actually means for people now to comply.
Now they're coming into force in 24.
Yeah,
coming into force in 2024.
Yeah, exactly. Still quite a while. Yeah, thanks for that, Michael. Interesting to see, of course, very hot topic still ESG, right? So MAS is usually around the Singapore Fintech Festival. They always make a lot of announcements about things because they want Singapore to be the center of the world, especially during the Singapore Fintech Festival. Very large event with tens of thousands of visitors. And one of the things that the MAS, the Monetary Authority of Singapore, announced that was an ESG hub where they're inviting fintech companies, incumbent players, and everyone to actually collaborate on making an impact on ESG. It's interesting to see how they're actually also using this to, for example, issue challenges for companies to solve. For example, everyone to actually have access to a bank account, for example. And one of the challenges they also issued, which I think is also quite a hot topic currently in Europe, is ESG data, right? So the point is you can have the best intentions that you want, but very often people don't really know what their impact is because they don't have the data about, several steps down the line in the value chain, what actually happens with their product, their funding, or whatever. So there's a really big quest going on, and we see also a lot of asset managers and investment funds are currently actually looking for these kind of solutions or even building them themselves. Well, another important one, especially in the Dutch market, was the fact that Bank, the neobank, one of the largest neobank, I think, in the Dutch market, got a case up to the Dutch Central Bank. So they found that the Dutch Central Bank made them do anti-money laundering in a stupid way. And normally you see that actually it's quite common that usually the regulated entities then try to solve this behind closed doors and are not so open about it. And definitely don't want to go to court for something like this. But Bank really stepped up because they said, it's just so stupid. We think we should be able to use let's say machine learning to actually do a better job at screening transactions for money laundering than the manual way that we're forced to do because by the central bank. And they won this case, and that was really unexpected at the beginning because this was something that usually you don't see in court opposing the central regulator that often. So there was quite a landmark, I think, and I think it was welcomed by actually most of the banks to be able to explore much better different ways of doing money laundering and reducing the cost of actually maintaining accounts and screening transactions. Very important one, I think, in the Dutch market. And probably will have an impact as well across Europe because these kind of judges, or the impact of what they say is basically broader than just the Dutch market. Well, interesting as well that the Apple Card has been issued now with a high yield savings account. Generally, I always get a red flag when someone says high yield, because usually means high risk, but that's not what they say, right? Because where does the yield come from is always a big question. I haven't dived deep into that, but it's really interesting to explore how, well, we know that all big tech firms are somehow popping up with solutions in the financial industry. In any case, around payments, they're becoming very active. But this is also one of the ones where you see they're actually moving more into balance sheet financial products, which I think is a really interesting movement. Probably not so much welcomed by a lot of banks. And the question is also still whether consumers actually fully understand what the nature of the product is, what kind of risk they're entering into, and how to judge what they're dealing with. Let's see, I'll speed up a little bit. There was a merger between Mobile Pay and Fips, two nice payment companies. I think quite interesting that they've approved quite large ones. European Commission instant payments regulation. So instant payments is basically that you 24/7 are able to make direct bank-to-bank transactions across the SEPA, the European Union system. That's being proposed now, and that's basically starting up the regulatory process now. And Moneyline, which is a US-based personal finance app, is actually setting up a university by themselves to do financial education, which I think is a really interesting one in case to pick up, because we still see that there's a lot of need for more financial education across the board. Then, looking a bit at what kind of funding we had a 423 million from Arctic Wolf in the cybersecurity field, quite interesting. SteadyBricks from Italy did a really nice round for 320 million. So you see, it's nice actually to see that they were, it's funny, there was just around the Holland Fintech Summit, this guy was basically the whole there, whether it was Elon Musk himself, CEO of SteadyBricks. It was quite interesting to see. Become a hero all of a sudden, because just a few weeks before, none of the Italians had ever heard about SteadyBricks. But suddenly it's a hero. It's quite funny to see how becoming a unicorn actually does something with the states of people. Well, of course, then we had some US firms, Step, Trip Actions, and DPT is also an interesting one from Stockholm, again, putting in some cloud. There was also a report recently coming out that Stockholm and Sweden were actually really doing well as sort of a fintech ecosystem index. And yeah, this is again one of the examples of actually a lot of thriving companies coming forward from that ecosystem. Then on the Dutch market, we got Florijn, lender, peer-to-peer lender that raised 65 million from NatWest, quite a nice one. Then we got some smaller amount from FlatCap and Your Campus. Let's go into the cloud recording. So these are some nice deals that are happening in the Dutch market. So glad to see also there, with even though the predictions were really bad for fintech funding, given the rising interest rates, inflation, market uncertainty, we're still very happy to see deals still coming through at that level. Then some of the research. It's funny to see actually that even though, let's say at the beginning of the year, there was still quite some growth in the crypto trading perspective. So we had an interesting report from Chainalysis that came out that you can actually check in our previous newsletters that showed that there was still a lot of increase in trading. On European level, it was actually a bit less. Here, especially Western Europe, 15%, Eastern Europe, 22%. But especially Middle East and North Africa were still very much on the rise with regards to their trading. And it also has a lot to do with, I think, a lot of the insecurity around currencies, right? So especially when Forex goes crazy, which you see now that due to inflation, due to the volatile interest rates or rising interest rates, especially in the US and Europe and China. You see that especially in the emerging markets, some of the currencies are basically going up and down like crazy. And a lot of people would then actually resort, for example, to more safe or more stable mechanism to exchange. And that's why crypto is very often being used as a forex mechanism there. And yeah, as just said, we're expecting funding to go down because of this a bit of a venture capital crunch because of the rising interest rates. Yeah, we actually really see that in the funding in Q3, which is basically sliding down. So it's a bit of a shame that we see that going. At the same time, we also saw that valuations were kind of crazy. There wasn't so much money being pushed into the market. The kind of rationalization was also expected to come at some point. We just hope that we are becoming more stable now, actually at a more normalized level, that we can keep on getting funding, at least for all projects that are really worthwhile. And so from that perspective, I'm always really positive because I think still digitization of financial services just keeps on going, right? We're not expecting that to slow down anytime soon. So from that perspective, the market dynamics are still very good. I think the only thing you have to take into account is especially things that are really capital intensive, so that basically means B2C solutions that are required, basically have a lot of cost of acquisitions for new customers. Okay. Yeah. A lot of customers, if you require a lot of money to acquire customers, so basically most of the B2C propositions, think about Klarna, for example, also Stripe and others, you see that they've tuned down, cut a lot of costs, and have to basically go into a slow growth path. As well as that everything about trading, right? Especially with volatile markets, you see that the neo brokers, but also all the crypto traders and so on, they're basically in a bit of a troublesome period right now because there's just less capital available. People are less inclined to go investing right now compared to a couple of years ago where everyone started investing all of a sudden. So that makes a bit of a different market dynamics than before. But digitization of banking, digital identities, RegTech, data, that's all still going like crazy, and that won't stop somewhere, I think, in the coming period. I'll stop at that. I think I've spoken more than enough. So we're ready actually for our presenters. Are you ready?
VP of engineering for a large fintech company in Ireland. And one of my biggest challenges was keeping our cloud infrastructure cost low or keep it under control. And now with the looming recession, there is more people like me struggling to keep the cost under control. And that is the problem that we aim to solve. And if you look at the current solutions that is available in the market, first and foremost, you can hire expensive cloud experts to come in, look at your infrastructure and reduce the cost. If I want to rephrase that, you have to spend money to save money. Other alternative options you have is there are a few low-hanging fruits that you can take. There are a few options that you can do. You can buy reserved instances, savings plan, right sizing, etc., etc. It gets you a little far. But the biggest problem is companies, especially fintech companies, we tend to have non-production cloud infrastructure, which is primarily used by our internal employees and engineers, and which is not really used throughout 8 hours a day. It only sparsely used here and there. Despite that, we tend to run these 24/7 because the usage one week may look like this and the other week it may change. So it's really hard to predict this and turn off the servers. The best way for us to turn off or reduce the cost is by turning the servers off when they are not being used. And this is where SteadyBricks comes into picture. SteadyBricks is a SaaS product that connects with customers' cloud infrastructure and observes how their internal employees are using their resources, and it automatically turns the resources off when nobody is using it and turns it back on when somebody needs them, and thus giving them the biggest savings possible. And the best way to describe this is think of us like the light sensors in the office that turns the lights off when the office is empty and turns it back on when somebody walks in. We do the exact same thing for the cloud infrastructure or customers. And sometimes for companies, this brings significant savings. The usage here is more than 30% of their cloud bill. We can cut that 30% significantly, sometimes even up to 90% of that 30%. And our current traction, we are part of Techstars that is run in partnership with ABN AMRO, not very far away from your office from here. And we are currently co-building our product with a few fintech companies, and we also have trial commitments from 4 fintech companies. And the way we charge our customers is we have a monthly flat fee, but we also take 20% of the savings that we bring them. That way, our performance for our customers is tied, or I mean, our revenue is tied to the performance and the savings that we bring to our customers. So there's a bit of jumble with the slides there. So the global cloud infrastructure or the cloud cost management market is a massive market, but our beachhead market is a small subset of that. That is mid-market fintech companies located primarily in Europe. And again, within that, our target customers are companies with at least $1 million annual AWS cloud bill, because that's where we believe we can bring significant savings. There are competitions in the market. There are a few companies that does a really good job, but the biggest problem with them is they have solutions that does one size fits all, which means they can bring you some savings, but they have a hard limit how much can they bring. And in order for us to bring, in order for a company to bring significant savings to the customers, they need to be really thinking about how to build a solution that evolves with the customer's cloud ecosystem. And that is where SteadyBricks shines. We have taken a very extreme focus on a vertical that is very much fintech focused. Our application evolves with the customer's cloud ecosystem. The more it understands the system, the bigger the cost savings it brings to our customers. And an opportunity like this needs a very experienced team. Brian, my co-founder, and myself, we have more than 25 years of experience and deep domain expertise. And we both come from a strong fintech background as well, with strong credentials. And although we start with the cloud cost management, it's just the foundation that we have. If you think about it, the fintechs and financial services contribute to 20% of the global GDP. Despite that, a significant amount of their innovation budget is wasted on building and managing their cloud infrastructure in various different ways. And what we aim to do in the long term is we want to offer fintechs and financial services one-stop solution for all of their cloud-related problems, and giving their headspace and their money back so that they can actually fuel their innovation and build the best products they can for their customers and push the boundary on fintech innovation. Thank you very much. If you are someone, with a high cloud cost bill, or if you know someone who has extremely high cloud cost, we would love to talk to them. Please come and find me, Sri, or my co-founder, Brian. Thank you very much. Okay.
We have a very high cloud cost.
Yeah.
We need to make sure all of the stacks are running 20%.
Yeah.
How would this solution fit in our infrastructure?
So again, it depends on different places. Right now, our primary focus is companies with high non-production cloud cost, like especially the way you run like sandboxes. Again, sandboxes are there for your customers to use, but it's not like they're using it 24/7. We really observe that. So right now, we are starting with non-production, and then we are moving above production. The biggest problem that we have right now is the time it takes to start a server. It takes about 2 minutes, but there is also technological innovation that is actually bringing them the time. There is something called Firecracker VM. That's something that we are thinking to bring in very soon in the near future when we go after the production infrastructure. But the problem is it takes 33 milliseconds to start. In order for us to bring that to production, it needs to be under 10 milliseconds. So hopefully that will be there in another, say, 12 to 18 months. And when it is there, that's when we go after the production. And that's the place that we can actually come and talk to you and give you more savings. Yeah. Of course, yeah, me too.
By turning things off.
Yes.
So I assume you're talking about infrastructure as a service.
That's correct.
How about platform as a service?
Sorry, the infrastructure service, right now, when we mean infrastructure service, we're talking about the cloud providers. So when we say we turn off things, we turn off the servers and the databases and the likes of it. But if you look at this one, This is the one that is immediately comes on top of the cloud, which is the platform management. The best way to describe this is think of it as Heroku for fintech that is run within your own cloud, so that you don't really have the platform management problem at all. We take care of it for you. Oh yeah, yeah. Is it? Yeah. So we do. Let's take an example. I'm getting a bit technical here. Let's take Elastic Beanstalk as an example. That's a platform as a service from AWS. We do have ability to turn those off because we call it like scaling down. It's not turn off, the different terms, but we do that. We do have support for that. Yeah.
I think that's an important one as well, right? You really need to pull up.
Yes.
Plug in, you have to operate that.
Yes. Of course, yeah.
How does that collaboration go?
It's actually really good. We are actively thinking about getting partnership or getting onto the Amazon partnership network because I know it sounds like we are eating up their revenue, but we are more as a value-added partner for them. So that is actively underway. So hopefully we will be there. We'll be active partner with AWS and Microsoft Azure in the next 6 to 12 months. Yeah.
Any other questions from anyone? Then let's keep it at this. Let's give Sri another big hand.
Thanks very much.
Or we'll look at the QR code again so you can go back to that. Yes, ready? And then we'll go to Ivo. Ivo, a former colleague, so really happy to see you here as well. And very much.
You're not getting older, right?
No. As long as we're aging at the same speed, it seems like we're not getting older. Right?
It's all relative, right?
It's all right.
Good afternoon.
Let's give you a big hand, everyone.
Hi, my name is. Time is starting. Has started. My name is Ivo van Lelo. I'm a part of the Blacksmith KYC team and responsible for business development in this team. What are we? Blacksmith is a team. It's a tool which is actually transforming the KYC at banks. I think banks seems to be kind of a hot topic today with its digital policy manager. And it's called the KYC. We're trying to tackle the KYC conundrum, the KYC issues that banks, financial institutions are facing nowadays. KYC, of course, stands for Know Your Client. Know your client means, do you know your client? You're onboarding a client, not alone. You need to know what the client comes from, what the entity is, but also once per year, per 3 years, per 5 years, you need to do another know your client search on them if they're still compliant with your internal rules and regulations. You're using a CDD, another abbreviation is called client due diligence. And the client due diligence is where banks, financial institutions, insurance companies, also energy companies have big issues. And we trying with Blacksmith trying to tackle that, to digitalize it and to automate that. Who are we? We are actually an initiative being built in 2017 out of ING Labs. When I think we are in the middle of ING, we are in the middle of NEO, but the department that I'm coming from, it was also called ING NEO, and it's not existing anymore as of January 1st because all the innovation from ING is actually being absorbed by the business. So a new chapter for us, everyone. Where are we located? We're actually located in Singapore. We have a team, total of 30 people, 30. And we're now building up a team also out of the Netherlands. We have the clients that we're aiming for are FIs, banks, non-banking FIs, but also energy companies which needs to do a KYC or needs to do a CDD file. Already partnering up with some partnership mentioned here, like ServiceNow, Salesforce, CGI, and Bankers Almanac. And to be honest, we are also, because we're quite small, right, but we're leveraging the relationship that ING has as the big mama standing behind us. Actually, we are spinning in, but actually we want to spin out as well. And also, just for your information, I'm looking also for investors here. So what are we trying to tackle? It's huge. I mean, the banks in the Netherlands alone, the big banks are spending literally $500 million on a yearly basis on KYC. 1 out of 5 people at the bank are working at the KYC department or are linked to a KYC activity. The compliance officer, he has pains as well. There's a lot of jurisdictional differences in some legal entities. KYC operations, they get an instruction which is all paper-based. It's a PDF file or it's in Excel. The front office, a relationship manager needs to go to a client to ask for documentation and to ask for all kinds of paperwork if it's not being fed out of the databases. And then, of course, head of KYC, I just mentioned the huge cost that there is. What are we offering? I still have 1.5 minutes. We have a digital policy manager. Actually, we digitalize the whole policy of a bank. It's a risk policy. That is actually where the bank needs to maintain its risk exposure. It's all in PDF, it's all in Excel. We have completely digitalized that. We have a data hub, so we are kind of independent on which data we can connect to. We can connect to Bloomberg, we can connect to Encompass, to the Dow Jones, to Bureau van Dijk, Bankers Almanac, etc., etc. So we aggregate the data out of those data sources. We apply the digital policy manager on that, and that's the third module. A CDD file pops out of it, and CDD file looks like this. This is a CDD file which a bank normally, if they do it manually and not being digitalized, takes 1.5 days. We do it in 45 seconds. And these are the partners. These are the data sources that we're currently partnering with. And of course, more partners can be connected via API as well. And that's also my job, is to look at these partners, to look at clients, FIs, non-banking FIs, and to look at strategic partners as well. This was my pitch. I hope you liked it. And if there are any questions, please let me know.
Are you actually still open for different kind of partners? So this
Yes.
perhaps also a call out for people that are parties that are able to provide you with data or services that fit into this.
Absolutely, yeah. So it's indeed the cliches, or we buy, or we build it, or we partner it together. We really need to focus on product development. All the resources, the time and money actually being spent there, and if it's you talked about about, for instance, AI and this kind of stuff and machine learning. That's still not what we are having. What we love to partner with these kind of parties as well.
Yeah, somehow also I get triggered by the name actually, because that blacksmith, that's hard labor, right? So
yes.
Mending the iron, that's a tough job.
Yeah,
it doesn't feel like that. Or,
no, KYC, you've been in the bank as well. KYC is hard labor. It's frustrating. It's extremely expensive. Bank seems to be more a KYC organization than a real doing what they're good at. It's hard labor. It's expensive as well. But and we try, and that's the name of Blacksmith. We try to, with that hard label, to bring something beautiful at the end. Right? It could be a golden ring, or it could be a diamond necklace, and that's the whole idea behind the name as well.
Cool. Any questions from the audience here? Yeah, go ahead.
It must be pretty crowded in this space because it's such a big problem for banks.
Yeah.
So there must be many companies like yourselves offering this kind of service.
Yeah.
So where are you different?
That's a good question. Actually, that's what Don also said. We are actually, I call it in a positive way, not crowded, but it's the ecosystem that we are in. When we are going to banks, the banks always say, well, we have Pega, we have Fernergo, we have workflow systems, or we have Salesforce, we have ServiceNow. But we haven't seen a solution like this in the sense that we actually kind of niche. So we're not covering from A to Z, but the niche part of onboarding a client on an automatic way and then aggregating the data. And we are not the data aggregator because there are thousands and thousands of data aggregators. But the pill in the crown is actually this: we digitalized the whole policy. Which, for instance, with ING, it was in Excel. It was an Excel spreadsheet. It was a PDF spreadsheet, and then automatically getting it out of the data and then coming up with this customer due diligence file. It is extremely crowded, but to be honest, I haven't seen exactly this what we're aiming at, and I need to explain indeed very clearly to banks that we are doing something different than Fernergo or Pega or other workflows. But it's a hard convincing game for me as well, and I fully agree. Sometimes they feel that it's the same what they already have.
Could you argue basically that you have outside-in providers that actually provide data and services from a more standardized outside perspective, and that you're actually trying to match the internal process to actually match up with that?
Exactly.
That's I think you're the missing link.
We're trying to be the linking pin here. There's a lot of data. When we talk to a big US company, I mean, that was a huge experience. Ping-ponging an NDA took us like 4 months. I mean, talking about a long sales cycle and the pain points. But indeed, we are the linking pin between that, the data service and us. Yeah.
The challenge might be that for each financial organization that you try to work with, you have to assess the whole process.
Yeah.
Even there's a standard base, like in the requirements might be technically the same.
But we see that the pain points, they're all the same pain. It's all manual. It's not cost efficient. For instance, like ING, we have 400 people, KYC analysts around the world who are actually doing this. 400 people day to day working on filling in going into the data. So now it's been automated because ING is one of the clients right now. But before that, it was all manual. And we are just at the start, and I agree with you, it's a very fragmented market. Yeah.
Any questions here?
Is this just for new clients, for onboarding, or also for existing clients that in the money laundering process?
Yes,
need to
indeed. It's for new clients. If banks still can onboard new clients nowadays, because it's sometimes it's tough. But also for clients which are already their client, because they need to do due diligence every once per year or 3 years, depending on the risk of a client, or 5 years. So, and for instance, a BNP has a correspondent bank, for instance, with let's say Citibank. They need to do due diligence every 3 years because it's already an existing client as well.
Yes,
Is it B2C or B2B or both?
B2B. Business, yeah, B2B. Yeah. So I'm after the FIs, financial institutions, and non-bank financial institutions. But funny as well, I've been approached just by a huge energy company as well. It needs to do this client due diligence as well on their clients. So it's actually, the segment is also expanding as we speak.
And which geos do you cover?
Which?
Geographic, which country?
It's global. Yeah, it's global because it's a global system. It's a SaaS online system, so you don't have to put it on premises. I'm the only business development guy. I carry the whole the globe on my shoulders, but it's implementation is quite easy.
Because now I don't want to take too much time because the GDPR and similar laws are in different countries.
Yeah,
and you need to make sure.
It's a good point. This morning I talked to my Turkish colleague. No way that we can enter their market because we need to be in the markets.
Right.
Poland, likewise. Czech Republic, likewise. It's very hard to go into the market. But the world is quite big, especially for me as a person who needs to deal with business development. And there are other countries which are quite open.
You just said you need to be in the market. You mean you need to be physically in the market.
Yeah.
These are local requirements.
Local requirements.
They say if you want to be a data processor, you need to have an office here.
Physical office,
yeah.
We need to be able to go to your office and meet you, and then you can do data processing.
Yeah, has to do with amongst other GDPR. Yeah, big point.
All right.
Thank you very much.
Let's give it a big hand again. Ivo's presentation. You all able to say something about Ivo's presentation? Then we're going to move on. Okay. Yes. There we go. So you can go to kahoot.it and use the code 9119771, or because I think the QR might be a bit difficult there at the back. You can give it a try. There is a QR code. I think it's a little bit small for using the back. So then please go to in your browser to kahoot.it and use 8119771 as code. Does it work now at the back with the QR code as well? Nice crowd. Of course, people making use for this branding opportunity here as well.
I'm so cheap.
Some people have their nickname already up their sleeve. They probably are going by this name every weekend, right? So, yeah. Cool. I think we're about ready. Just double check. Everyone got in? We're okay? Yeah. All right. Then let's get started. So the idea is I read up the question. The questions, the potential answers correspond to a certain color, which you can use in your screen to answer, right? And the faster, the more points, the better. Which company has distributed software to help banks identify and cut off transactions from fraud-prone crypto exchanges? Is that Bank, MasterCard, Visa, or Maestro? So Bank in MasterCard in blue, Visa in orange, and yellow, and Maestro in green. I am sorry, I have to confess I'm colorblind, so I can't really help you with colors. Right? So, yes, it was MasterCard. I'm glad you paid attention before. And indeed, they launched this software to identify transactions from potentially fraudulent crypto exchanges. So you don't know how it works, and after every question, we'll show you the leaderboard and see, well, A, as fast as you are with choosing your name, as fast as you are with answering. All right, very well. We've got the double A questions, so 7 more to go. Here we go. Which country is planning to invest in NFT and the metaverse? Is that Japan, Belgium, the Netherlands, or Singapore? This is one for the quick fingers. All right. Yeah, mostly thought, oh, indeed, yeah, Singapore was in the news, but it was for especially the launch of the ESG hub. Right, so that's for the 13 ones that pick that one, and for the rest of the class, you pay attention also on the Japan news. Any change in leaderboards? JD was slightly faster. Well done. Let's see what happens in the next question. Which bank won the landmark case against the central bank? Was it ING, ABN AMRO, Rabobank, or what? We're getting started, right? Don't worry, you get some left backers. I think we talked about this enough. So most of you will know. Yeah, it was mostly, it was indeed Bank who won this case last month. Scrutinizing the AML policy they were forced to follow by the central bank. Any changes here? Fast one, A. Nicely done. Finex has become the first company to receive a European license to offer what products? Insurance, payments, pensions, or securities? Indeed, that was a pension solutions that are able to offer. Well done, most of you. Let's see if there are any changes. No, A is still on top. We see still some movement. Now it's moving in very nicely. What is Apple going to offer? Personal loans, savings accounts, mortgages, or investment accounts? Yes, most people got that right, even though you could argue that when they promise high yields, whether it's actually a savings account or something else, it is indeed promoted as a savings account. Any changes here? Oh, JD picking up the head again. Interesting developments. Couple of questions to go. The regulator of which EU country suspended the license of FTX? That's that's word from this week, right? So we've got the exchange FTX that basically completely lost trust of the market, was almost acquired by Binance, but in the end Binance retreated, and now actually became known last night that the European regulator suspended their license, which was in Cyprus, right? So it's generally you see both Cyprus has quite a favorable regulatory environment for crypto exchanges, but so now that actually the exchange is completely bust, they decided to withdraw the license, which is some time, of course. But it's interesting to see. But Malta would definitely have also been a good choice because also quite some of the exchanges are. What happened here? Ooh, oh, big shake-up. Yeah, this was a bit of a tougher question. Well, two more questions. Which EU legislation became final last month? DORA, MiCAR, instant payments, or crowdfunding? This might be a bit of a tough one while we're heading towards the answer. Because actually, crowdfunding was already final legislation a bit earlier, but last week the technical standards came out, which might be make it a bit confusing. But we announced indeed also that MiCAR became final from a regulatory perspective, and DORA is still a bit in the process. And instant payments is announced to become legislation at some point, but it's merely a proposal so far. Yeah. All right. Any changes here? It's beginning to take shape towards the end. Let's see if the last question is making any changes. What was the largest funding round in the Netherlands last month? 50 million, 35 million, 75 million, or 65 million? Recall well, it was Florijn who raised the funding. Most of you got that right. I think that's quite nice. 65 million was raised, which is quite significant. Let's see what that brought as a result. And number three, we have SteadyBricks. Number one is Fincon. Well done. Really got a yeah, well done. And also a small one for you. So, we see you before, so you got the hang of this, right? So you got your quick fingers for that. But well done, well done. Anything? How do you keep up with all the news? Well, actually, only questions on the board. Thanks a lot. Well, enjoy your weekend and enjoy the rest. Congratulations. So maybe the suggestion was to make it a bit harder. Let's see for next time. Boom. Then we're up for two more presentations before we head out to actually announce who just as the best presenter, and then we'll, of course we'll head out to some drinks to get you all warmed up in the weekend and hopefully get some live conversation started between all of you. Charles, are you ready?
Yes.
Yeah?
Thank you.
Let's give Charles a big hand, everyone.
Here we are. Cheering me on here.
I'm a founder with 3 previous exits. I'm ex-Deutsche Bank, ex-Fidelity, where I used to head up AI. And when I was in that role, I saw a great opportunity to help shake up the world of ESG, which, as Don said, is a really big opportunity right now. And I'd just like to introduce you to a couple of the people who we're helping as we're building our company. So this is Vincent, and this is Joe, Anna. Vincent is the CEO of Ethos. It's a sustainability investment firm based in Switzerland. And Joe is the CTO of Credit Suisse. Vincent's problem is he's really concerned about the risk to Swiss pension funds of companies that they're invested in failing to digitalize successfully, so introducing new ESG risks into their businesses through failed digital strategies. And what Joe's trying to do is understand how Credit Suisse can drive their digital performance further forward and stay ahead of their peer group. So those are the 2 problems. What Vincent did in 2020 was he published his expectations to the Swiss market of what digital responsibility looks like. So beyond regulation, how he feels and his organization feels that companies should be responsible with technology. And what that means is that now he needs data in order to look at Swiss companies and see how well they're tracking against those expectations. And that's a real problem for Joe, because what Joe needs to do, not just managing her own business and managing her own digital transformation, she also needs to report to Ethos in terms of how that organization is doing against those expectations. And of course, this area of what Ethos call corporate digital responsibility is just one area of a wider group of ESG issues. And of course, Swiss companies are just one cohort of many many firms that the Swiss market is invested in. And of course, Joe, Credit Suisse, it's a very large listed business. It has many priorities, many different stakeholders it's got to manage around these ESG issues. And Ethos is just one of this group. So how do we solve this problem? Well, for Vincent, we provide a data set that's perfectly aligned to his expectations, not just on the Swiss market, but potentially on any company using our prediction engine. And we're looking to expand that across a whole range of ESG issues, not just corporate digital responsibility. And for Joe, what we're doing is we're helping her understand her performance against her peer group by giving that peer comparison. We can also offer supply chain assessments. So it's one of the things that we're really hoping to do while we're here in Netherlands is building our business here, helping Dutch organizations understand their supply chain risk. Because when you think about digitalization, you can manage your own IT systems, but it's actually your suppliers. If one of your suppliers has a GDPR breach or a cyber attack, it's really them that introduces risk to your business. So that's what we're trying to do. And of course, investor relations professionals at large listed businesses, but also privately owned organizations, VC-backed organizations, they have to manage these requests for information from their investors. And so we're able to do this in a really super efficient way. And how do we do this? We use a prediction engine in order to be able to predict the answers to each of these different ESG issues, even if the company doesn't cooperate with us. And I'm very happy to explain afterwards how exactly we do that. And we're also able to help organizations like Credit Suisse only focus on answering the questions which are the most relevant questions to their business, and importantly, the best predictors of all the long tail of ESG issues that their stakeholders want. So those are really the 2 key things about our business. At heart, we're a prediction engine. In case you're wondering what on earth is this whole corporate digital responsibility thing about, well, it started in 2019 with Federated Hermes. My old colleagues at Fidelity launched their digital ethics fund back at the end of 2020. And now we're seeing organizations representing about $7 trillion under management, making public expectations around these issues. That's about 1/6 of the total ESG space. The whole global asset management industry spends about $32 billion a year on market data, but the fastest growing part of this is ESG data. As Don said, it's a really big problem. Joe is just one of many people that we help and support, such as Swiss banks, engineering firms, telecoms, payments, cards companies, and also insurance companies. So we've got 53 organizations using our platform to date. What I would like to do today is encourage you, if you're not an investor, obviously we'd like to talk to investors, but if you're not an investor, what we really need is more users. So please go to our website, www.ethicsgrade.io, because we provide a lot of information for free on our website. So if you're interested in the relative performance of TikTok against Twitter, Toyota against Tesla, and we provide all this data for free on our website. But ultimately, we have a paid license for ESG professionals at investment firms. And there's a company who's already taken this playbook called BitSight, and they built a multi-billion-dollar business focusing just on cyber risk. We focus on everything else. Got a very diverse and growing team based here, down, as I said, in Amsterdam-Winterberg. And our goal over the next year is to grow our company coverage by 10 times from 53 today to 500, cover many, many more companies, start to cover funds, to convert some of our users into paying clients using supply chain analysis, and ultimately sell our data to investment firms. I'm pretty sure I'm out of time, so I'll just skip over the last few slides. But yeah, we think the biggest opportunity in the financial services market is ESG. And the most important thing is to be able to help people like Vincent, who have very, very particular goals around ESG, see the world through their own lens. So thank you.
I'm curious now, you skipped that where you said, you know, we have a way of convincing them to actually collaborate 5 days.
Yeah.
So how do you do that?
Yeah, sure. So, so what we do is we have an automated system that produces scorecards on organizations, and we send an organization a scorecard. We say, hey, this is an automated assessment of you using, you know, subject matter expertise, knowledge. We explain a little bit about how we do this, and you know, here's the scorecard. And we're sure there's more to the story than we've been able to glean from publicly available information. And so if you feel that there's something else you need to tell us that you haven't made public, then here's a platform that you can use to provide that information. Oh, and this is the thing that's very different to other ESG companies is, oh, by the way, if you don't, then we're just going to publish this anyway. So as I said, on our website, we publish all the information on all the companies that we cover. And so that's a really strong incentive. And that's why out of the 400 companies that we've been covering up until now, we've got a very, very strong response rate, because obviously these organizations are highly motivated to make sure they give us data. And now our prediction engine is going to scale across from 400 to hopefully 4,000. And that will really drive the number of companies. And of course, the more companies that provide us with data, the more accurate our prediction engine becomes.
Well, I think, let's say, what I see often as well, for example, labels of houses and such, they generally just say, okay, you can go from A to F, right? If you don't tell us anything, you're an F, right? That also works.
Yeah.
Generally. You're very bad. Right? So that's sort of what I see happen a lot as well in that perspective. Thanks. Really interesting, I think. Are there any questions from the room? From anyone?
Example about the challenge for financial services. How can fintech work with ESG goals?
Yeah, let me give you a really great example from just this week. So, you know, people in the ESG space have been pointing fingers at the crypto market for a long time in terms of its environmental credentials. But the big issue that's been staring everyone in the face that no one's really addressing is the governance problems at some of these organizations. So we're going to spend a lot of months now unpicking what's happened at FTX, but really, you know, all the things that should have been in place in order to protect against something like that happening, you know, we already could have known. So, you know, we see that actually as the crypto space becomes much more mature, as becomes mainstream, there's going to be, you know, a huge amount of demand for data on relative performance of crypto organizations in terms of their corporate governance. And obviously that touches a huge number of stakeholders. You know, if you're the smallest retail investor with you know, an NFT or you know, with actually crypto assets, or whether you're, you know, my former colleagues at Fidelity, everyone really has a stake in understanding the relative performance and the relative strength of crypto firms. And guess what? No one has data on that. We're the only ESG company that specializes in tech companies.
The energy issue, the crypto process, the Bitcoin process costs millions of dollars for mining, but it's not green energy. Shouldn't it be green energy, and how do we get there? Shut down the Bitcoin process globally or whatever.
So I think this is, I think Anastasia and I were talking on the way over here about is that you've got to really look at context. You really have to understand the subjective perspective of every stakeholder. And the problem with the ESG market is there's a bunch of white overprivileged men like me who are making assessments as to what ESG should be, and therefore, you know, what is good, what is ethically good. Whereas actually, you know, a lot of the people in the crypto space, you know, they have a counter argument against the energy consumption of their platforms, and they argue for different benefits. But actually, what they are very concerned about and what they're willing to spend money on data around is around corporate governance. It's very old-fashioned, very out of fashion, perhaps, until recently. But corporate governance is, to them, to that stakeholder group, much more important than the environmental credentials. You know, we all have slightly different perspectives in terms of what we value, whether we value, you know, human rights or whether we value environmental issues. And then if we do care about environmental issues, which ones do we focus on? Plastic pollution went from nowhere to suddenly becoming a mainstream topic and then it's died down again. So, you know, we're, I think, the only platform that's able to really offer people a data set that's tied to their subjectivity without any judgment. And that, I think, is really important. We have a long way to go.
Yeah, also, I think interesting what you mentioned. Because I think it's very often overlooked in the ES. Everyone thinks like it's like environmental, social, and then, yeah, how to govern it. But it's actually the governance itself, that's what you mentioned, as a measure for performance as well, which I think is very often overlooked. If you talk about the governance of crypto firms, for example, people would not see that as part of ESG assessment in very many cases.
Exactly, exactly. And I think that's what's so interesting about this space is that, you know, the ESG started with governance. You know, that was really where this whole industry began, with activist investors 25, 30 years ago. And then, you know, it's become synonymous with climate change and sustainability, environmental sustainability, which obviously is crucially important. But actually, in the case of crypto, where most people who have been the kind of, you know, crypto sort of, you know, fan bros of the last couple of years, you know, they've kind of played down the environmental problems that it's had, much to the dismay of environmentalists. But now those very same people are now demanding data on corporate governance, which is, you know, actually what firms like mine are very good at and well set up to provide. So it's a really, really interesting space.
Yeah, sure. Cool. Any last questions from the room? Just checking.
How long was threatening as a business development service last?
How long is it, say?
The BD motion is give us your rating, otherwise we'll publish this report that shows you in a bad light. How long does that last? Won't you mature out of that threatening BD motion?
Yeah, so I would say it doesn't necessarily have to be a negative. If what we're trying to drive is corporations being much more transparent about the good things that they're doing, but if they don't publish any of the examples of what good practice looks like, then yeah, they're going to get a crappy rating. So the thing that they're most upset about when we first get in touch is they're really worried that what we're offering is a shakedown, because there's plenty of people in the ESG space that do exactly what I've just said, and then say one additional thing, which is for a one-off fee of 5,000 euros, you can use our platform to provide us data. Now that I have some issues with. We don't do that. Our service to corporates is free. And as soon as they realize that we're not trying to make money out of them in that way, then they're very, very open in order to providing us that data. The way that we monetize those organizations is through then offering them a supply chain assessment. So it doesn't matter at all to us whether...
More than
Exactly. So it doesn't matter to us whether they're good or whether they're bad. What we're just trying to do is help them understand their supply chain and therefore understand their risks. But where we're monetizing it is really by selling the data to investors. But a key piece of it is being able to provide all this for free. I don't think any other ESG company provides their data for free to consumers, to academics, to journalists. And it's all there on our website if you want to go and look for it.
Cool. Well done.
Thank you.
Final one, short question.
Are you a regulated entity?
Yeah, it's a really good question. I mean, I personally believe that the ESG space should be regulated, and there's a lot of people who are saying that, you know, ESG companies like mine need to have, you know, minimum standards of processes and controls in order to be able to do what we do the same way as we would expect for the credit rating industry. But the truth is today, no, what we're doing is not a regulated activity. So that's great because it's meant that the barrier for us to get into the market has been lower. But really the barrier for a business like ours is really around the data. So we've been around for 2.5 years now. We have a lot of organizations working with us. We have a huge data set. And so really that's our barrier to entry, and that's the thing that protects us against competition. But absolutely, you know, we want to make sure that, you know, new people into the market do come in a very professional way and meet the same sort of standards and controls that we've been building up the hard way. But as of today, it's bizarre. Yeah, there's nothing from a compliance perspective preventing anyone. But obviously, if you go into the market and say, here's some random data, or here's something that's made up, or here's an opinion, then you can very quickly get yourself into hot water. But, you know, our approach is systematic, it's data-driven, the methodology is available, and the data we publish is transparent. You know, I think that's unimpeachable, rather.
Cool. Thanks.
Thank you.
All right, I hope you will have a chance to use QR codes to
Yeah, great.
All right.
Perfect.
Let's
Well-
give him a big hand, everyone.
Well, thank you, and thanks to ESG, because we are another startup in the ESG space, and for introducing how incredibly messy this is. There are not enough regulation, enough standards, or maybe too many of them, which dilutes the purpose, I think. And assessing the performance of a company from an ESG point of view is really subjective. So different ratings that people can provide, be it MSCI, Standard & Poor's, Moody's, Sustainalytics, or whatever, they are divergent. They don't agree with each other. And that is not a problem, because actually it's okay not to have the same views in ESG. What's not okay is not to be able to explain it. So EthicsGrade does it through transparency, but most companies, they don't do that. And that's actually a problem, because for the whole ecosystem, they have to be able to communicate well, to integrate it explicitly into the investment process and have a real actual impact on the economy. So asset managers, they cannot really have a view on what other asset managers do, because they all have their internal secret sauce based on data that most of the time don't really understand. So that's it for them. Pension funds, they can't really know and compare funds that they want to invest in from an ESG point of view, because either they'd have to send them questionnaires, but people are sick of questionnaires. There are too many of them, and it doesn't really help on standardization. Or they just go on Morningstar and see the rating that the fund has. But the problem with Morningstar is that they would rate everybody using the same methodology, Sustainalytics one. And since different methodologies would diverge from each other, they would not be able to assess what asset managers actually do internally. And corporates, of course, they emit a lot of data, but have really low feedback, so they can't really integrate it. What we do as ValueCo is bringing clarity to this ecosystem to help everybody understand better what they're doing. So what we do is we go to asset managers and get their own internal score and assessments of the company that they compute themselves, the proprietary score. Once we have gathered all these scores, we can distribute analytics to the whole ecosystem, corporates, pension funds, and asset managers, to give them a better view, but with the right level of anonymity on what everyone is doing, so that they can really communicate and have the good, proper data. The way we differentiate from all the other sectors is that we do not assess companies themselves. This is the job of EthicsGrade. We assess how investors integrate these assessments into their investment processes. What do they do with these grades? How do they transform it? How do they compute their risk, their return based on this? What do they do with that? And this, we provide a benchmark, and we are the only ones to do this, actually. There's no other company that can go and grab the internal proprietary scores from investors. And this is what makes us unique, these data sets. And the reason why we're the only ones to do this is that all the other actors that already have stakes into the ESG rating industry or the investment industry, of course, there'll be a conflict of interest for them to just go and see all the other asset managers and request them, how do you do this? A few of them are transparent on their methodologies, but that's pretty rare. We are independent and we have the trust, so we can get these scores and make the computation that no one else can do by pulling this data. And we're pretty much protecting ourselves from new incumbents with a strong research effort since the beginning of the creation of the company. And we've won several awards on the computation that we can do and provide to really break down and explain the scores that we are pulling and distributing to everybody. So basically the way we work, it's a SaaS platform. So we have the data contributors. There are 2 steps to our activity: getting the data. So the way we get it is in exchange for this data, we provide free services. So there's a collective engagement. Investors are interested to know that they're providing feedback to companies because they've all been signing the PRIs and checking the box that they need to give this feedback, and also access to our research. And then if they pay, if they become subscribers, then they can have market signals and analytics. And this is pretty much the business. So far, we have 15 asset managers contributing their data. 2 of them have already signed a pre-sales agreement for platform that is going to be launched by the end of the year. And we have completed 2 pilot projects with pension funds and asset managers to really validate that our data is up to the market. The team to build this project, the CEO, Mariam, she's been working in the financial industry, so she's really into the network and sales part. And me, I'm a data scientist, and I'm pretty much focused on research and products. So if you are interested in knowing a little bit more about what we do, don't hesitate to come talk to me at the cocktail. I think it's going to be anytime now. Thank you.
Yeah, I think really interesting solution. Did you already talk about how they sort of match up? And, how you
Oh yeah, quite. Actually, we work 2 meters from each other, so
yeah, exactly.
we know.
Yeah, cool. Any questions from anyone?
That's clear.
It's very clear, or completely incomprehensible.
Yeah, all people want to get a drink.
But I think that's always challenging around this time. But I think what's interesting, right? So you say, okay, how do we actually make this data incorporated in the core process of investment?
Yes.
Generally, if you try to simplify that, right? So do you see that it's basically like a go, no go boundary condition, or is it actually being quantified how it's being used in investment decisions, like a risk factor, for example? What ways do you see, what is your experience so far?
Well, there are several kind of strategies. The most basic and widespread one is negative screening. So yeah, go, no go. We rate everyone and we exclude the bottom 10, 20, 50%, whatever the threshold, and just an exclusion. Some others have more advanced strategies, really trying to do some stock picking once they have a really granular data, when they want to make an impact, for instance, to promote diversity in the team of tech companies. Then they could go to really specific granular data and metrics on which they can act. And some others, they're really trying to build up valuation models that integrate explicitly this criteria. So either when they're trying to optimize between a risk return, they add this ESG to really have a full incorporation, or some others using discounted cash flows or trying to integrate into the beta or the WACC small adjustments based on the ESG scoring. So there's really a wide range of strategies, but most of the investors they use it for screening.
Okay, so you basically then also offer them the possibility to actually execute on all these strategies based on the data that you have.
Well, we assess how they build the scores, because to do some screening you have to do a ranking of your companies. So we observe the ranking and we provide a benchmark to compare to the market or to their peers. Like, what are the differentiating factors that you express through this screening? Does it really match your investment thesis? So we won't do the screening for them, but we assess how they do this. And actually our vision is aligning values with valuation is to go beyond that. Obviously, to really integrate it, because there's a real problem between the short-term objectives, short-term targets of financial companies and the long-term impacts that they have, and they really struggle. And well, I don't blame them. It's a very complicated process, but it's really hard to really strike a balance between these two long-term and short-term problems. Yep. So we really want to help them develop new models to integrate explicitly this into their investment strategies and their valuation models.
Yeah. Cool. So is that also something that actually, I mean, very often what I see a lot is that people also respond to sort of the trending news of the day, right? What are the politicians talking about? And when it's outrageous that oil companies are spilling, then all of a sudden that needs to go out of the investment agenda tomorrow.
Yes.
Do you also see that kind of sort of current needs for change of strategies that is actually on a really high demand? Because it's you can make an investment for a long-term perspective, but it might need to be adapted actually on day-to-day news, right? So I think that's an interesting perspective.
Yes, there's in ESG, there's the ESG, and then there's controversy and news that can have quite a big impact. Thing is, when you look at rating agencies, sometimes they can adapt quite fast, but most of the time investors, they still update their scores once a quarter or twice a week, twice a year, maybe once a year. So it's really not dynamic data, and that's something that's lacking to them to reintegrate it into their investment models, because they have every 6 months a new grade, so they can't really build a model on this. So we help them really assess how they can build up their capabilities and their analytics to really adapt and have a more dynamic perspective. So yes, some of them would really react to news differently. Some of them would say we need to engage to have a feedback and to figure out what we can do with these companies.
Yeah, exactly. Yeah.
If they don't want to, they just divest. But the problem is that, yeah, dynamic data, apart from news, it doesn't really exist. So we still need to step up on this with data providers that are a bit more efficient.
Cool. Thank you. Work to be done there. Last check. Any questions from the room? No?
Thanks then.
All right. Let's give you a big hand. All right. Yes. Oh, I need to be whispering in my ear what score was. Did you all actually, by the way, did you all rate the last? Please do that. Please do that. Otherwise, we're going wrong here. We should, of course, have a fair process. The G should be in place here, right? The governance of this whole process. Hope you all got the chance to give a proper vote for all the 4 presentations. I'll wait for that a little bit. Before we get the answers to see you going in. Are we all done voting? Yeah. Good. All right. Clear. And we have a winner. The pitch you rated best for today was EthicsGrade. Yes. Yes. I think it was Bear.
It was the bear. Yeah.
Yes.
Thank you.
Congratulations.
That was really unexpected.
Yeah.
Thank you so much.
There you go.
Thank you, everyone. Thank you so much.
And one. Thank you very much. Right. So well done. Yeah, I think it's nice to know. Also, nice to bring a personal touch to the presentation. So well done, and thank you all for sharing your feedback. And please engage, of course, with all the speakers today, because I think it's really nice to dive in deeper into the conversation, but hopefully under some light which you know. So thank you. Yeah, here for the.
Thank you.
Very good. Thanks a lot.
Thank you.
Upcoming events. So we're heading, of course, towards the end of the year. We've got senior class coming to the country in this Saturday, so things will go crazy. But we've got, of course, still some events coming up, and most of them are actually ramping up towards 2023, because we are actually organizing a session where we will look at Amsterdam Fintech Week plans in 23. The same we'll do also for Money 2020. Right, because we actually will generally organize a collaborative engagement as in a shared booth and some shared activities during Money 2020, which is in June. So if you're interested to participate in that, you could definitely join the session on November 30th. And we've got a FinTech Insight session for everyone who's a bit new and like to explore more about what's happening behind the scenes, how does it work, what does it all mean. We have a session on November 28th. An investor breakfast in 2 weeks now, where there's actually an opportunity to pitch to investors if you're still interested in that. And we have an anniversary party on the 24th of November. Plenty of things coming up. This is still just November, so in December there's still more to come. So, but then we'll talk to you, of course, about that on the 2nd Friday of December. It will be hosted by ING, and as a continuation of our conversation today, it will be focused on ESG. Again, so we'll go a bit deeper and look forward to seeing you all here. Of course, we'd like more feedback from you if you have the chance. And of course, before we end up at Go Drinks, I can really like to emphasize first of all my thanks for all to join here. Our speakers today produce such a great job explaining what to do and opening up. And of course, our kind host, Greece, for being so kind to host us here in this very nice environment. So looking forward to be back. Thanks a lot. Thanks a lot. Really great. Supporting this. So thanks for doing that. And we're looking forward to hear more about 5 degrees and working with you going forward. Thank you, everyone. Enjoy your weekend and see you next time.